But let's put the spotlight then on Biocon Biologics. The arm has exited the branded formula business. Remember, there's a long-term pact with Eris Life, and it's a deal that's valued at about 1,200 crores. Shreehas Tambe, CEO and MD at Biocon Biologics, now joins us on the show to talk about the contours of this deal. Thank you for taking time out. Now, with this deal, you have sold another part of the India brand business. In FY25, will the impact likely be on your P&L, and how much of an interest cost will this deal help you save?
I would just look at it from a different perspective. We've not sold any part of the business or exited the country in any which way. The way I would see this is that we have entered into a long-term strategic commercial collaboration with Eris Life Sciences. Now, Eris Life Sciences is not a stranger to Biocon Biologics. Last year in November 2023, we'd already entered into a similar partnership with them. And what we are looking to do now is build on that further. What we are doing is to expand our reach to many more patients in India, and looking to see how we can leverage the very strong commercial field force presence that Eris Life Sciences has. And Biocon Biologics, of course, will remain invested in this, very committed to the country and patients in India, because we will continue to have a long-term manufacturing and supply relationship, which we are committed to, so that we continue to grow the market shares and the brands that we've built over the years.
Right. Shreehas, any clarity that you would have on the plans on how to use the funds? How is it that you plan to utilize this? Would it be for debt reduction?
Well, that debt reduction is certainly one of our key strategic objectives, and that's something that we are focused on. At this time, I will refrain from discussing where and what we will do with the funds, but clearly, debt reduction has been a key objective. We have shown our commitment by actually prepaying $200 million of our debt ahead of time last quarter itself. So that's clearly a signal and a message that we are committed to net debt reduction. At this stage and time, I would focus on the strategic nature of this particular announcement and the value that we are able to unlock with the business that we created, the brands that we have built, and clearly the potential that the buyer sees to further grow these brands and the business in India. And I think that is really what today is about.
So why did the company exit India business? Why did you think that it was an optimal strategy, given that what would be the growth drivers now for India business going forward?
If you look at our business model historically, there has been our business model which says that we will find the right structure and right business model for every market that we operate in. There are several models that companies employ. Self-commercialization or self-led direct-to-patient markets models are one of those, which we were using in India. But that requires a large reach in a country like ours. Having presence and a large field force is very critical. Another critical thing is having a large comprehensive product portfolio offering, which then allows you to leverage the capabilities and the product offerings that you have for that particular market. Now, what we've done, and this is not just in India, but even if you look back in time, we've always partnered with strong regional players who have that commercial reach, so that these products can reach millions of patients across that region and that country. Now, India is such a strategic market for us, and there are several patients who need access to these high-quality, life-saving drugs, that it's very important that we have a large commercial reach. So what we've done with this partnership is we've partnered with a company which builds on our capability to develop these products, manufacture these life-saving drugs, and supply them.
This person. So what are the other avenues that you're looking at to reduce your debt?
We've said in the past that there are three broad buckets that we've put into perspective. One is, of course, we've seen equity investment, interest in equity investment into the company. That's something that we've talked about. And as these discussions materialize, we will certainly, be able to discuss that with you. The second area is that where we've announced in the past is when there has been a stake sale, which has happened in the past, but Biocon Limited has clearly said that at this point we're not looking at that. And the third avenue is to go to a liquidity event, which is an IPO. All these three options have always been on the table. Now, the timing of each one of these events and each one of these levers that we have towards reducing debt is what will unfold in the time to come. But clearly, these are important areas to focus on, and we've always been focused on debt reduction, which we will continue to.
Right. US as a geography is going for complete interchangeability, which also implies no use of field force. What could be the likely impact for that on both Biocon as well as the industry?
I mean, we've always been for enabling access. We've always been to reduce barriers, if at all it's possible. If you look at it, interchangeability is a very US-centric requirement from a regulatory perspective. Globally, if you look at it, whether it's the European authorities, whether it is the British authorities or Japan, we have not seen this as a specific requirement. A biosimilar is considered interchangeable by default. But the US FDA has a regulatory position on interchangeability of a biosimilar. Of course, there are arguments on both sides, and we believe that if there is a barrier that can be removed and there can be increased access to patients to these high quality drugs, then I think we would be very supportive of that. And the sooner we can get all biosimilars accessible to patients who need them, I mean, that is really going to be a boon to the industry and to the patients, most important.
So can you tell us about the upcoming launches, something new which we should look forward to?
Yeah, I think I will refer to the recent announcements that we made on the patent settlements with J&J Janssen with their biosimilar that we are developing to their drug Stelara, which is biosimilar ustekinumab. We believe that's a very significant opportunity in the US, and we have now a settlement agreement that we announced. We also talked about a similar opportunity in Canada for the ophthalmology drug aflibercept or Eylea with Regeneron. And both these opportunities, we believe, have been announced and are very significant, one in the US and one in Canada. And clearly one happens this fiscal, end of this fiscal, and the other one early next fiscal. So we believe clearly there are near-term opportunities which we are very keen about and we are looking forward to.
All right. Thanks so much then for taking time out and giving us the contours of that deal. Let's get a move on then.